All right, so today we're hearing from two experts in the investing industry. These guys will talk about how the investing landscape is changing, how young investors can think about long-term investing, and we'll even talk about how Reddit can have a significant impact on a certain index. Now, before we introduce our guests and dive more into BUZZ, a quick reminder here that securities, as well as the strategies discussed in this video, are not recommendations and for informational purposes only. Investing always involves risk. All right, so let's get into it.
Hi, everyone. I'm Jamie Wise, the founder and CEO of BUZZ Holdings, the company behind the BUZZ U.S. Sentiment Leaders Index.
Hi, and I'm Ed Lopez, head of ETF product at VanEck.
All right, guys, thanks so much for joining. So today, what we want to talk about is kind of the history of BUZZ, where it comes from, or the index, and then about how VanEck created the fund to actually implement this. But what I want to start out with first is just a quick overview of what is BUZZ and how was it founded?
Sure, I'll take that. BUZZ really started as a research project for us, and it was around this idea of investor sentiment that has been something of great interest to me throughout my career. You know, in financial markets, we hear a lot about sentiment all the time. And for most of us, we're trained to think of sentiment as some contrarian indicator. And what I found is, and what most of us know, is sentiment moves markets, right? That's happened since the first day a stock ever traded on the New York Stock Exchange. But how do you quantify it? And if it was as simple as being contrarian, why can't we always just fade sentiment and get it right? And I think one of the problems with thinking about sentiment historically was it was always thought of by way of proxy. So we think about market sentiment. We had no good way of measuring it. So we would do things like poll people, or we would look to various types of fund flows, or maybe a measure like volatility, the VIX. We're familiar with hearing about that index, the fear index, but it never really got down to the individual stock level. And where we got excited about, potentially using sentiment at that individual stock level was, back in 2014, I'd say. I noticed there was a real increase in the amount of individual investors going to online platforms and talking about stocks and individual stocks. So they were having conversations about IBM and Boeing and Disney and Netflix and all the stocks that we are, come to know about in our portfolio. And in doing so, they're leaving a digital trail. And so if we could build an algorithm to sort of monitor that conversation, for once and finally, we could actually use data to say individuals are positive on one stock and maybe negative on another, and then use that data to determine, is sentiment once and for all contrarian, or might it be predictive of good performance within stocks?
For the average investor out there who's younger, maybe looking to explore different ETFs, what do you actually mean by sentiment as it relates to investing?
That's a great question. There's different ways of thinking about sentiment, right? There's brand and consumer sentiment, which many of us are familiar with. And a good example there would be, I went to the Disney theme park, or I went to an Apple store and I had a good or bad customer experience, either with their employees or with their products. Or you can think about it from the investment perspective, which is what we do within BUZZ, meaning, I as an individual have an opinion on Apple stock. I believe it's going higher. I believe it's going lower. I believe it represents value. And so when we talk about sentiment, and specifically within the BUZZ index, which is positive investor sentiment, it's only thinking about those comments and posts of individuals considering it from a stock perspective, from an investment perspective. So do they believe the stock is essentially going higher? Are they positive toward the prospects for the company?
How would you describe how that sentiment is actually measured? So, I log in, I go into Reddit, or let's say I want to go into Wall Street Bets and I want to see what people are saying about this one stock or one ETF. You can kind of get a feel for like what their feeling is towards it. But how would you, in terms of the index and then eventually with the fund, actually measure that sentiment?
And what we're trying to do is, use an algorithm essentially to replicate that feel that you're just talking about, right? Those of us that are involved in markets, you can go to any one of those forums and look through the conversation at an individual post level. You have a pretty good sense if the person making that post was positive, neutral, or negative about the stock. The problem is the sheer volume of data that exists, right? And none of us, even an army of analysts, couldn't spend our day reading every single post and scoring it and then trying to add up all of the, the aggregate view of those posts and represent that as people are net positive on Apple or net negative on Boeing, or one versus the other. And so what we have now is tools, and it's a branch of computer science. It's called natural language processing. But essentially, you can train a computer to read through the posts and approach that problem with the same experience that you and I have in understanding what sentiment is. And the advancements in natural language processing make the accuracy of that approach better than ever. So I'll give you a quick example. Historically, when natural language processing first evolved, it was essentially a dictionary-based approach. You could curate a dictionary of words. These words are positive words, these words are negative words, and then have a computer scrape through all the posts and look for those words and try and tag those posts as being positive or sentiment. The problem, of course, with that approach is it loses all the nuance. And especially when it comes to stock conversation, the language that people use is very different. And positive words can mean negative things, negative words can be positive things. And the way people talk about stocks is very different than the way they talk about their experience with brands and products and those types of things. So what natural language processing has evolved to today is you can basically train a model. If you have enough properly labeled examples, you can teach it basically the same way we've all learned, which is through years of experience. You can train that model and give it years and years of experience with millions of positively labeled posts so that it can understand the nuance of the conversation. It can pick up on sarcasm. It can understand, different language that's stock specific, so that when it sees new posts, it can rely on that experience and have a much higher degree of accuracy and probability of predicting whether that post was a positive post with respect to the stock or negative. And that's what we've done here at BUZZ, is we've created those models that allow us to go to whatever form it may be, and then have that algorithm look through millions and millions of data posts and then understand collectively what is sentiment on all of the individual stocks being talked about.
Okay. So you're able to train this model to get it to understand what positive, negative, neutral sentiment is. All right. That makes sense. How do we go about turning that actual index that you've been tracking for years into an actual fund?
The first thing that we have to do is, when we're creating the index, we have to give it some guidelines, right? So the algorithm is really good at measuring each of those individual posts and determining whether sentiment is positive or negative. But then we have to think about using some common sense and some safeguards to say, how do we collectively represent the output of this in something that makes sense to people, something that could be licensed for use in an investment fund that would make sense. And so when we create the index, the guidelines that we've constructed around it are, first we look at large cap US equities. So we describe that as stocks that have a market cap of 5 billion and up. So we want this, that the stocks that are being represented in the index to be stocks that people are familiar with, and they're big and liquid enough so that they can be investable. And then we also have to think about sentiment over different time periods, right? So if you think of sentiment, you could have very short-term sentiment. A news headline comes out and people have a gut reaction to it, and there's a flurry of conversation. Or there's longer kind of sentiment trends, which is what we target within the BUZZ index. And what that means is we're thinking about sentiment really over the last month, right? And so it isn't as susceptible to the whims and ups and downs and volatility of minute by minute, hour by hour sentiment, but a picture can emerge from it. And so we're trying to capture in the index, and this is why we rebalance the index every month, this longer term trend, and we can identify which stocks are trending and have that longer term sentiment to them. And then we can assemble them. And then we have to think about how you want to weight the stocks in the index. And when we weight our stocks in the index, we decide to do it based on their sentiment strength. So the higher the sentiment overall, the higher the weight will be within the index. And we just cap that at 3%. So we don't want to have any one stock out of the 75 stocks. Each month, it's a target of 75 stocks in the index. We don't want one or two stocks having a disproportionate weight. We're trying to allow for the sentiment factor to come through in the index, which means you need an element of diversification. That's another safeguard within its construction. And so we weight these 75 stocks by their sentiment strength. The higher the weight, the higher the sentiment, the higher the weight, up to a maximum of 3%. And we do this process every month. And we have been doing it for, 6 years now, since December 2015. So we have a real live track record where we can see exactly what sentiment delivers to a portfolio.
All the things that Jamie said is exactly what we look for when we try to launch a new ETF. We want something to be or to provide exposure to an asset class or in an area that with companies that are big enough and liquid enough, and where the underlying theme or trend we're trying to capture is not just a fad or a short-term necessarily trading opportunity that's going to fade away in a year or so. We wanted something that's going to be persistent. And the way he built his rules in this index really helped elevate that, looking at making sure that the sentiment that he measures is measured over longer periods of time to make sure that there really was something there, that the companies were big enough to include. And the way he constructed the portfolio to weight it towards the ones with the greatest sentiment, all fed into what we looked for in terms of an ETF that was going to be tradable, that was going to be have better trading efficiency and liquidity. We started talking to Jamie maybe 2 or 3 years before we actually launched an ETF on this. So we kicked the tires quite a bit on the methodology. And, I think it's been right on the cutting edge of technology and social media. We did take some time with it, but at the end of the day, we saw how that methodology produced, like you said, live index returns that seemed pretty solid to us.
Younger investors these days like to have more say, more flexibility, more customization of what they're investing. Gone are the days of plug and play with an S&P 500 fund and linear red. Sure, there's investors out there that do that. I'm partial to that investment strategy, but I think younger investors want the flexibility. But I think one thing I'm thinking as I'm listening is, what measures do you have in place to make sure that this sentiment doesn't track the wrong type of stocks? Like we all remember GameStop, AMC, and Wall Street Bets of the last few years. How do you make sure that it's actually tracking what you intended this model to do?
The first way I'd address it is it's not the job of the index to determine, which stock is suitable or not. But certainly there are times in the market where stocks behave seemingly irrationally. And maybe the early days of the GameStop phenomena with Wall Street Bets could be a good example of that. And so one of the safeguards and rules we have in our index construction is we curate a list of stocks that are eligible to be included. So we look at stocks that have a market cap greater than 5 billion, but not all of them are eligible. The one key thing that we test for is the breadth of conversation, meaning, are these stocks being talked about day in, day out by a large number of people? You can imagine that the insights of tens of thousands of people talking about a stock would be very different than just the three of us, talking about a stock here and there. So we want to make sure it's got that seasoned conversation. And the other important part of that is that we measure that seasoned and maturing conversation essentially over a period of a year. So we have to see that that's been demonstrated, that conversation has been happening for at least a year before a stock can be eligible to be included within the index. And so when you have some of these early days of meme behavior of a stock, typically most of them aren't immediately eligible to be in the index because it's something that's just happening now, and the seasoned nature of that conversation hasn't been long enough for us to view it as eligible for inclusion. However, if that conversation stays elevated for a long enough period of time, then it can become eligible. And GameStop is a great example to talk about in that regard. When GameStop first, started happening in December of last year, January of this year, it was not eligible for the index for all those reasons I mentioned. That conversation just wasn't seasoned enough. And frankly, the reason people were talking about GameStop then versus today is very different. Back then, it was very much a short squeeze. It was this Reddit community that had targeted that stock and based on the short interest of hedge funds, had decided to just see how high they could push it. And there was very little talk about fundamentals for the company. It was all about how high can this thing go and how can we squeeze these shorts out of the name. Fast forward 6 months later, the conversation that we observe now about GameStop is much different, right? The management has changed. There's an activist investor. We're talking about changing the nature of that company. Can it go from brick and mortars to online? It's not anymore a short squeeze stock. It's a real fundamental debate. And we hear the voices of that fundamental debate across all these online platforms. The conversation is seasoned enough that it can be included in the index, and it has been featured in the index this year. So it's about when it's eligible that's important. And I think it's important to allow for stocks and the themes and the reasons for people to talk about them to play out a little bit before just quickly including them in the index.
He just hit on one of the misperceptions of the fund and perhaps of other strategies that are out there. And one of the reasons why we love the methodology and the longer term nature of measuring that sentiment over time is that it's not a meme stock portfolio. While some of those stocks might end up in the index eventually, this is not something that's it's going to be as affected by whipsaw natures of some of the meme stocks that are out there. So I think it's something to really try to understand that we're measuring long-term sentiment and the underlying stocks that go into the index.
Communication has also changed, right? Now, obviously, we see in forums, we're not just using words, we're using emojis, we're using other types of communication. How, kind of getting maybe back to that sentiment, how does this index measure that and make sure that it's reading, the proper ways of all forms of communication?
When we first developed our models, it was still early days around conversation happening online with respect to stocks, and it was mostly text, English text. But then, like everything else, the same way we talk about our social lives and consumer products, as the marketplace matured and as more people came to the ecosystem, they started using emojis, right? And not just everyday emojis. Now, of course, we see rocket ship emojis, we see going to the moon emojis, we see, bulls and bears in posts, right? Emojis that we wouldn't typically use in our everyday life. But the nice thing about those emojis is it's just code behind them. And so we can train our models with millions of examples of posts that contain emojis, which emojis in which how they're organized could be used in a positive way or a negative way. And so that when the model now sees and has been retrained to understand emoji use, when it sees text with emojis talking about stocks, it can understand whether they're positive or negative. So it's just about refreshing it, just like us, right? We have to get new experience. We have to learn what the latest, I'm a little older than you. So a lot of these acronyms come out and I don't know what they immediately mean. And so we have to learn what these new acronyms mean, what this emoji means. The model learns the same way. And once it learns it, it knows it and it can apply it to new experiences.
And remind the viewers again where exactly we're measuring this sentiment, what platforms are being used to measure this?
Across really all online platforms to see where people are engaging in conversations about stocks and trying to find the data from those platforms. So the ones that would come to top of mind would be a platform like Twitter or StockTwits, where there's the majority of conversation happening. Reddit is an interesting platform, but it's very different than the other two that I mentioned in the sense that the forums there are much narrower in breadth. They're talking about a few stocks as opposed to the universe at large. And that's really one of the key features of the BUZZ index is that, like Ed just mentioned, it's not just about meme stocks. It's not just about, NASDAQ growth stocks or momentum stocks. There's all these different reasons and forums of why investors might be positive towards a stock, right? People can be positive because they believe there's growth in the company or there's price momentum and that they think that will continue. But then there's the opposite reason why people might be positive, which is value stocks, right? Stocks that are falling out of favor, that might have fallen too far, that all of a sudden, in their view, represent value. So the unique part of the BUZZ index is that it's unconstrained in that nature, in the sense that it can hold both growth stocks and value stocks. And you see it in some of the top performers. It can hold stocks across all sectors. And it's really the one common denominator is that the community at large is positive on the prospects of these stocks. And when you look through some of the top contributors to BUZZ this year, you'll see names like chip makers, NVIDIA and AMD, but you'll also see Ford Motor Company. You'll see healthcare companies like Moderna and Novavax. You'll see American Airlines, and right next to American Airlines, you'll see Twitter, right? And I find that the most fascinating is that it's very hard to find any portfolio manager out there, any active manager who's going to have such a unique collection of stocks all contributing to the gains of the index. It's that unconstrained nature that makes BUZZ so unique, and that doesn't bucket it as just a meme stock fund or a momentum stock fund where it's really narrow, the investment mandate. It's totally unconstrained where it can go, and where sentiment is positive, those will be the stocks that it holds and ultimately contribute to the performance.
Any misconceptions of the fund that you'd like to cover that you think maybe some people have had over the last couple of years?
First misconception is that BUZZ is a price momentum fund. Most people, when they hear positive sentiment, they expect that most positive sentiment stocks will be the best performing stocks, right? And so stocks going from the bottom left to the top right. And what we've seen over time is that's not what BUZZ is, right? BUZZ is not perfectly correlated with price momentum indices or other funds that track that strategy. And it's because of the way people talk about sentiment with respect to stocks that, yes, might be growth, but also might be value. And so you get that balance in BUZZ where it's not just a 2 beta juiced up version of the NASDAQ. It is something completely different, it behaves differently. And that's what makes it a unique tool within your investment portfolio, because it's just not correlated as you would expect it to be. And the best way I can highlight that is, like I said, just go look through the fund, look at its holdings, look at what contributes to its returns, the index returns, and you see names like Exxon, Ford, Goldman Sachs, AMD, Plug Power, right? And there's just so much diversity in what those stocks are. And clearly not all of them are going from the bottom left to the top right all the time. And yes, sentiment isn't going to be perfectly predictive. Nothing is. We all know that in investing. But at least you get this range of styles represented within the index.
Maybe I can get Jamie to weigh in on another misperception. And that is the misperception that one person can move the index or can move the sentiment. And I'll let Jamie explain it. But I think, just given the volume of messages online and the fact that we're dealing with very large cap stocks makes that very, very difficult to do.
Oh, absolutely. We found this early on. We kind of diminishing returns of influence is sort of how we coined it. And when we create the index, and we're looking at all of these posts, we don't give any one person or any one platform a higher weight. No one is, the guru smart person, and therefore their opinion of a stock is better than others. And the reason we don't do that is because we've seen so many instances where a person of influence, it could be a politician, a president, a star fund manager, will make a comment about a stock. But of course, that might have a very short-term impact on the stock. But over time, what it really does is drive broader engagement, and the broader view is what's going to drive that stock over time. And in the early days of stock conversations, I think people were surprised to hear these celebrities or influencers talking about a stock, and it had a disproportionate short-term move. But more and more as time's gone on and the marketplace is seasoned, people just use it as a starting point for discussion. So whether a star portfolio manager goes on CNBC and says, I really like stock ABC and I think it's going higher, stock ABC does not go immediately higher, but it's a great catalyst for a broader conversation. And now thousands of people can go onto their online forums and debate that comment. And who knows what the consensus view is coming out of that. Maybe it confirms that individual's opinion. Maybe it's contrarian to that. But certainly we think there's more value in a broader conversation than any one person of influence can do. And specifically in the large cap space, right? There's just so much conversation around all of these stocks. It's very hard for any one person to influence the conversation purposefully or even with bad intent. The conversation is too great. The stocks are too liquid. They're not these micro cap little stocks that can be, manipulated, if you will. And so really focusing on the aggregate is in our view, a much better way of thinking about things.
We mentioned Kentucky and Arkansas earlier. We got to talk about Missouri, where I'm from. My friend Chad in Missouri can go online and post something, and BUZZ will read his sentiment the same way as Warren Buffett going on and tweeting about the same exact thing. Let's say the same tweet. No matter what it is, it doesn't matter kind of who it is and what the background is. All sentiment is measured the same way, if I'm understanding correctly. All right, so I think another misconception or maybe a confusion around this fund or this index might be about the risk level, right? At Wealthfront, we talk about the risk level when building out your portfolios. We've seen an appetite for much higher risk in the last few years from a lot of our younger investors. How would you kind of go about talking about the risk level of this fund, the volatility included with it, and how a younger investor can think about that as part of building out their whole portfolio of investments?
There's probably a few different ways of thinking about risk. For one, on an absolute risk basis, which quants might quantify as something called standard deviation, just to kind of give you a perspective in terms of a numerical score. This is a little bit higher volatility, absolute volatility, than say the S&P 500. That might have a standard deviation of say 14 to 15. This might be in the order of 20 or 21 or so. But when you look at the potential, or you look at the historical return that the BUZZ index has achieved over time relative to its absolute volatility, you're seeing something that has a much better return for risk level, risk adjusted returns, we might say. So that's one type of risk to consider, more bang for the buck. And one of the other things that we noticed too in the data from the live index data is that during up periods in the S&P 500, the BUZZ index performed very well and better than the S&P 500. And during down periods, the downside capture, one might say, was actually less than the market itself. And I think a lot of that speaks to the diversification of the portfolio itself, the way it measures sentiment, and its ability to pick up not only some momentum names, but as we've talked about earlier, how it's also able to pick up some contrarian names and benefit from that as well. So you get this diversity of opinion and sentiment that's picked up in the portfolio.
What are some of the interesting stocks that you've found since you guys started this fund that have been included in this index that really surprised you?
Ford and Tesla are side by side as positive names in the index and at a meaningful weight pretty consistently. So you have a community of people, and we don't have to dive into Tesla. I think everyone can kind of understand that story, that are real believers. But then also, a real value set of the community that buys into what Ford is going to deliver maybe in the EV space and how they're going to compete going forward, and the value that stock represents, certainly compared to traditional valuations of a Tesla. That's been interesting to me. Another name that's always been interesting when we first launched the index, AMD, so the chip maker, and NVIDIA. These are the GPU makers of today that power originally our gaming consoles, but more and more they're the processors behind all of the artificial intelligence applications. And early on, they were overweight within the index. And then the stock started moving. And I recall, as they would go double and then double again, you turn on the traditional media and there'd be lots of commentary about how these stocks were overdone. And I think the community, what's interesting about what BUZZ can capture is when the community identifies a theme, collectively they have conviction to stay with that theme. Whereas individuals, you see a stock double in your portfolio, you may be, okay, I'm going to sell it now, or how much higher can it go? It's hard to maintain that conviction. So I look to the index as something that can reinforce conviction levels. And when I see those names consistently max weights, I think the community identified where we're going from a technology perspective and the need for the computing power to handle, artificial intelligent applications, and now the metaverse that we're all talking to, right? You need some hardware to power all of that. These companies were at the forefront of that.
One of the names that surprised me kind of early on, as we started looking to launch the fund, is looking at what happened in 2020, in March of 2020. The index included Carnival Corporation. Towards the depths of 2020, maybe April or July, I forget what time it actually came in, but when things were at its worst, that somewhere people were talking about Carnival Corporation as an opportunity. It was picked up.
Yeah, it's funny how the word tech is changing. Tech, what it was 3 years ago, 6 years ago, is changing. I think the younger investor might view a few years back tech as being FANG, right? Facebook, Amazon, Apple, Netflix, and Google. Now tech might include Ford in some way. It might include these companies that are reinventing themselves. And I think it's fascinating to find that you're not going to find a tech-focused fund probably go out and buy Ford just yet.
Absolutely right. The world is changing so fast, and those companies in the market need to evolve to that and change their business models to adapt or die. Right? We've seen that time and time again, and so that is absolutely a good point, and that's why we don't try and constrain sector exposure, because sectors change. There was a huge sector rebalance and reconstitution not so long ago where, a whole bunch of names that were tech are now called communication services, or maybe they're consumer companies, or, well, what if you had a mandate to be in tech? Now you can't own Google anymore? That doesn't feel right. And so you have to be unconstrained in your approach, and you have to be open-minded because the world does change real quick.
So I'd love to hear about kind of new ways. Obviously, crypto, meta is kind of main topics here in the new way of investing, right? Not just industries, but actual completely different asset classes. So I'd love to hear, Ed, kind of what VanEck is thinking about in this space, where the plans are changing in terms of building funds or building out investments in that space. So if you want to talk about that a little bit.
Our mission has always been to identify big macro trends and providing access to investors with, well thought out, innovative strategies. The BUZZ and the BUZZ index was one of those that we identified and we're eager to be part of. But going forward, there's a major macro trend happening right now, and VanEck is positioning itself in quite a big way to try to be part of it, both part of the ecosystem and both trying to provide access to it, and that's crypto, digital assets. Obviously, as many know, in the US, we've been trying to launch a publicly registered spot Bitcoin product, and that's been very difficult. But we are working on opportunities across different types of exposure. For instance, in this past year, we launched a fund that targets blockchain companies, the equities of companies that are involved in the digital transformation of the economy and of finance. I think we'll see more of that, more where we're trying to provide exposure to the digital asset economy. We'll do what we can to provide exposure to individual cryptocurrencies. We're doing a lot of work on the private fund space as well in that regard, where we have a little bit more flexibility to provide, single token access, actual spot access, as well as diversified cryptocurrency access. And it's been a very high priority for VanEck to be involved in this space. We're a global company. We have a European business which does have a burgeoning digital asset product lineup. We have an index business that is helping to set benchmarks for cryptocurrency valuation and trading that other sponsors can use as well. And, I think that is something that perhaps the younger generation is well attuned to. And we've been doing a lot of education of not only of the individual investor, but of financial professionals of what is really happening in this space. So I would encourage anybody that's really interested in what VanEck is doing there. We've put out a ton of content. Come to our website. There's podcasts, there's webinars, there's written content about how we look at the space and what's really going on.
Thanks so much, guys, for joining. Thanks so much for sharing kind of the behind the scenes of BUZZ and VanEck and the new ways that younger investors are headed today.
Thanks for having us. It's been fun.
Thank you.